and I'm here with my good friend at Rico Moneybags, who many of you know, who is often here on X as well and on YouTube, providing you with excellent content, and he's going to join me again today. Um, if I said we didn't have anything to talk about, I'd be lying, right? And isn't it great that we can do these things a couple times a week so we can come back and see what's happened to price and in near real time get to kind of unravel our analysis from prior days and weeks and in this case months too. And on Thursday, we spoke about how we use multiple time frame analysis if we want to see what's going on. And before I should continue, I'm so excited about what's going on. I forgot to thank our good friends at FEG Token and smartdefi.com and our exchange partners at BYDFi. And if you go to my X page or at Blunhouse TA on YouTube, you will find a link there to BitFi, and I suggest you give them a try. We're going to give away a couple trading bonuses again today. All right, now, I'm so excited. Coffee and volatility, that's what happens. So here we are. We were talking about multi-time frame analysis. If you want to find an entry on a daily chart that's going to be a trend move, what do? You look inside those candles. And on Thursday, we talked about how when the market feels toppy and you're trading above kind of all your major moving averages and support levels on a daily chart, you really have to start looking over your shoulder, because at some point in time, at the very minimum, you're going to want to check things like the 20 MA, and if you don't hold it, the 50. This is all part of the ebb and flow of money. Nothing goes straight up and nothing goes straight down. And is all we can do is kind of decipher the language so that we understand what's going on the chart. And going back to the daily, if you want to see if you can find a good entry, maybe it's a top, what do? Well, again, you start looking backwards. And on Thursday, we talked about this chart here. We've got 3 charts on your screen: an hourly NAS 100, a 4-hour NAS 100, and a daily NAS 100. Let's go back to last week, and we started talking about these sell signals that started to appear in the top right of our screen. Coming out of, there's lots of consolidation. You've got the 20 and the 50 MA are twisting. Price isn't, struggling to break through a certain level, and lo and behold, eventually we get a sell signal. And the bottom falls out. On the 4-hour, it simply looked like this. I'll just expand this a bit more. Right? That's what it looks like on the 1-hour. On the 4-hour, you can kind of see how this breakdown continued. But what do we see on the daily? We're literally just seeing on the daily, that's Friday, you started to spit out a sell signal. You have no idea what comes after the current candle that you're looking at on any given time frame, right? It's all just a series of probabilities. Here's your signal on the 1-hour, and you can tell the momentum was intense because what does it do? It spreads out your T-line and your 5 EMA, which we're using for trend and trigger, right? T-line is for is kind of for that trend, and the 5 EMA is helping us with a trigger. But what happens, that 5 EMA went red PDQ. Shows the momentum by how it expanded open. And you have this impulse down, equal bottoms, right? So there's your first move. There it is on the 4-hour. And this is what it looks like on the daily. But if you're not looking at these time frames, and you're only looking at the daily chart thinking, oh, when do I get a move? When do I get a move? By the time you see it, it might feel like it's already over. And this is kind of an example of that, right? Great move on the way down. Snap back. Challenge the 50 on the 1-hour. And what happens? You fail. We talk about this every week. First attempts typically fail. Well, there's your failure of the 50 on the 1 hour. Right? Go back, get some more flowers and chocolate, try again. This one looks like it's at least at this point, is starting to breach the 50. You've got your buy signal on the 1 hour. You're waiting for confluence on the 4 hour. And if the 1 hour breaks, what would you look to a target to the upside? Well, you've got the upper value range right here and the 200 blending into one another. So that would be a natural draw for price to the upside. And of course, you're looking to break the previous wave's high, which hitting those levels would do that. Does it break that level and start to take a run at the previous ones? I don't know. We're just going to have to let the chart guide us. But it's a process. Nothing happens all in one day, although it maybe on Friday it felt like it. Right? But I just want you to see this is how, it's a great example of, with market volatility as it is, of how you can start to see a breakdown evolve or a breakout evolve. There's the early signs. There's your 4 hour look. Your daily look never really broke. And I want to show you something here on the daily. And again, this is the NAS 100. And this is where we start to throw in some context on our chart. So if this is the daily, Friday's candle didn't quite meet the 50. On some other indexes it did, but didn't quite meet the 50. But nonetheless, there's your equal bottom, producing a snapback higher that tested what? The T-line in the 5 EMA, right? Closed below the 5, wicked through the T-line. Next candle, which is today's candle, holding the 20, wicked through the T-line, but again, you can see it just couldn't break it. That to me is still bearish. Is this divergence still intact? Down? Yes. So the snapback candle that can really get you excited if you just think you're going to go on and take new highs is actually failing. The snapback, this is what you hope happens, is that you actually, the thing has a heartbeat and it can push itself up to this level. If it sits here and hangs, that's a bearish sign and that's a problem. But you did snap back at least to that level to challenge. Current candle, however, is failing. If it fails the 20, if this is just a failed breakout and you roll over, don't you think price is going to be attracted to these lows? Right? Failed breakout, you roll over, arc, take out the previous wave's lows. And that could be how you get to the 50. We've broken one level. We're inclined to find the next. But it doesn't necessarily mean that the sky is falling. And I want to show you the weekly chart of this NASDAQ 100. If you were to look at the weekly chart and the weekly chart only, you'd be like, holy smokes, this is still a bullish chart. And it is. Right? Are you trading above the T-line and 5 EMA? Absolutely. Last week's candle, even with all the crazy volatility, just came back and closed above the T-line. Ugly candle, yes, but it did close above the T-line. And then here you are with this week's candle trying to recover. That's bullish. That's a bullish takeaway for me. I understand it's only Tuesday and there's a lot of trading to happen in this week, but just to illustrate, we use the T-line for trend, okay? This is what's helping us determine whether or not we're on the right side of a trade on any time frame that we're trading. If we're holding this level consistently, which you are, even on this weekly. So, you know, adding context to your chart comes from multiple time frame analysis. Make sure that you're looking at these different time frames so that you can see exactly what's going on. And if we take a case in point, I'm going to switch gears here a little bit. We're going to take a look at the XRP chart. And I know there's a lot of XRP fans here. This is the daily. And it's a chart that we've looked at before in here. These lines, we've talked about this before. This horizontal line was illustrating a structural level on XRP's daily chart. this horizontal line was simply picking up past price as a possible area of support and or resistance moving forward. You're also probably looking down here and you're going to go, what is that amber line? That amber line is your 1000 MA on XRP that's just started to appear. Look what price literally hit. Depending on the feed, it's to the penny. On this one, it's just a slight breach below. Friday's XRP candle fell all the way down to $1.15, $1.16, where it hit 1000 MA. When I say in these streams that I will have orders at unrealistic levels, because when price does move in a volatile situation, it's attracted to those levels. This is the perfect example. Like if I'm an XRP trader or an investor, I'm going to put orders down here. I know they might not get hit, I get it, but on the off chance that it does, I'm going to be there. But on this chart, the divergence that you see in the T line and the 5 EMA that we're using as filter and trigger are still telling us that the trend is down. And I was in a space on Friday, we were talking about this, is that my concern isn't this candle, isn't Friday's candle. And again, I'm not singling out XRP, this could be any chart. My concern is not Friday's candle. My concern is what happens after Friday's candle. This is kind of what I'm referring to, where we see this all the time, right? We have 3 candles that look like, oh, we've bounced, now it's a recovery. They hit the T line and then they start to peel back and fade. And that's exactly what's happening here. And here we are again, failed breakout, roll over, come back to the previous wave's lows. So I don't think that what we're experiencing is finished. The chart is telling us through its own unique language that we are still in some sort of a downtrend. And we will be until the chart tells us otherwise. Again, not singling out XRP, I'm just using it as an example, but what do? We start to back up our chart a bit to see inside that current daily candle what we're looking at. Well, we can see here on the 4-hour, that level that we've dropped in that could be a potential area of support and resistance moving forward is proving to be just that. We've got the 50 MA crashing down pretty hard. There's the point of control way up here with the lower volume gap being down below here. You know what this candle, what it wants to do? It wants to break higher and take out these highs and make a run for that resistance level. It's essentially the first time it would see it, both a 1000-day and a 50-day, so I would expect it to get a little resistance here, if it can actually, make it there at all. So what we're seeing, I don't think is done. I think I think there's more to come, and to get an idea of the irrationality that you're seeing in the springing up and down, or the elasticity of price, let's look at this is YM, which is the futures contract for the Dow. Right, there's Friday's candle, closes right at the 50, like literally right at the 50. Snap back, little bounce, wick the 5 EMA. This current candle is pushing the T line. So did Friday seem irrational and unnecessary? I'm sure that's how it felt. But price is showing you that it's at least at this moment in time, it's bouncing off an expected area of support and is showing us a little bit of something here. What happens when it gets to the 20? We're going to find out. It's the first touch. Maybe it hits it. Maybe this is another failed breakout. You roll and you come back to the 50 and take out those lows. Or you take out the previous wave's high. The chances of it going sideways, I don't think is very good right now. I think it's either up or down. I don't expect too much chatter sideways. But this is the ebb and flow of the market. So you are going to experience days like Friday. And it didn't matter what you were trading. There's CFX, we look at this all the time. There's Friday. Not too many safe places to hide. ETHFi, there's Friday. Again, here's ETH. Right? What happened? Big impulse down. Here's your snapbacks. There's your touch of the 50 on the daily. And lo and behold, two equal tops at resistance. And the candle starts to fade, and now it's faded below the 5 EMA on the daily chart. BNB. What did BNB do? No,
Right back up somehow. No, I'm joking. It was crazy though.
Like, this kind of stuff is just totally, and it seems to be part and parcel for the space, is this kind of nonsensical price action, right? But it is what it is. At the end of the day, where's it open and where's it close? It closed at the above the 20 and has bounced. Right now, I understand that we've got some fade. Look at these two. Remember we talked about this, that your short-term indicators can create patterns too. Look at this, two equal tops. Right, that's BNB. That's the 5 EMA. That's why when I connect levels of past price and support and resistance levels for the future, I'm looking for these areas where this happens. So here we're creating a little bit of a double toppy pattern. Price has just come back. No, it's actually a little bit below the T line on the daily. What's your risk to the downside? Obviously all of this. Right? These big hanging wicks, I hate seeing those because you just know that at some point in time you revisit them. Right? And this will probably be no different. But let's take some of the noise out of these charts. Let's go to the weekly. Look at the weekly tag of the 20 on the wick. Not crazy? But what happened? Price snapped back, and are you still trading? Is this still a bullish chart? Hell yeah. You're trading above the T line, above the 5 EMA, above the 20, above the 50. Yeah, it's still a bullish chart. So it's easy to get mired in those shorter time frames, and everything looks pretty glum and grim. But when you take a look at these longer time frames, what are the longer time frames doing? They're filtering out a lot of this daily irrationality, and in doing so, still prints a very bullish chart. Now, could this be a top? Obviously, there's your two equal levels and so on and so forth. So yeah, that's obviously the potential, but understand how price moves. It is a language. Reading price on a chart is incredibly valuable. Here's our Bitcoin chart that we've looked at. This is the weekly. You guys are familiar with these levels because we've dropped them in starting way back here before Christmas. Not realizing at the time when we could just start to connect its first level how relevant it would be moving forward. But that's why it's there, because I know that over time it would illustrate some sort of a consistent level of support and resistance. Here's an example of where you try and connect that 5 EMA RICO and along an equal level. And again, you can see how it's become a relevant area. Same with up here. Like, look at this current weekly candle. It's literally sitting on this area. Why? Because current price revisits past. It gravitates up and down to places that it's been before. And in the event of a downtrend, it's going to look for a level where it can sit down, and that's what it's doing here. It's just sitting down on all this past price. And if it's not sturdy enough to hold up all the momentum that's pushing it down, it's going to look for the next level down. And perhaps you can see through here where we've been before. And, you know, here we have the 50, time and price could come together, and you might find these areas connecting. But we've broken one level, so we're going to be inclined to find the next. And when we're looking at these volume gaps, because we respect the volume gaps, here's the upper value range on Bitcoin. This is a weekly, right? So it's significantly lower. So is the point of control. It's not even worth talking about. It's so far away. But this does illustrate.
You could scare the stream away if you talk about that POC.
Yeah, let's just pretend you can't see that line. Yeah. But you know, that actually brings up a good point, Rico. When we do these things, we're doing them not to poke fun or say, hey, you were wrong, or anything like that, because I'm wrong too sometimes, right? Like, it's just, that's not why we do this. We do this just so that we can identify that there is some, although it doesn't feel like it sometimes, but there is some rationale on why price does what it does, right? We're not predicting anything, right? What we're just doing is following, and maybe we're making statements that sound predictive because we're working off patterns that are historical, price action that's historical, and it might feel predictive. And maybe one day we'll be proven that it is, but that's a hole I don't want to go down. But it's just, if we use what we have, handful of things in our toolbox that we use really well, it can help us organize what we see on the chart, no matter how volatile the market is. Right? If you were looking at this chart and been in our stream and see price, because remember, at one point this would have been a big red dagger that would have been sitting right on the 50. If you're familiar with being in our streams, and you would see that weekly candle doing that and then start to bounce, I don't think you'd be freaked out. I really don't, because you're going, okay, wick the 50 and shot up again. I feel better about that. Understanding what's going on the chart, especially in times like this, is what keeps the sane from the unsane. And it keeps you from making mistakes out of reaction. Right? That's what this did, right? It's just would force people out of a reaction to make a mistake. And that's probably what happened to a lot of people. The concern that I do have with the XRP chart, by the way, before I forget, is that, do you remember last week we talked about this being a structural level? This level in here, that's why this line is here. And that if we were to break this level, and again, this is Thursday, so this was the day of our stream, and this is the next day. We talked about if we broke this level down, that it would be a structural break, and that could be problematic. Did we know that we were going to capitulate right down to 1,000 MA? No, we have no idea. Like we talked, Rico, we don't know what comes after the current candle that we're looking at. Right? We just don't. That's what Thursday's candle printed. And we could see that we were breaking some support, coming back to test the structural level, and understanding that if you break a structural level, there's a message in that, right? And that's kind of what happens. And you can see it. Notice the T line, notice the 5 EMA telling you that the trend is still down. This is probably the most simplistic way for you to tell at a glance whether or not you're on the wrong or right or wrong side of something. Okay, it really is. Now let's look at Aster, because everybody is. Here's the 4-hour Aster chart. I might even have to shorten it up a bit more because it's so new. You can see the 500 EMA or 500 MA just starting to appear along here. Could you imagine? And I wasn't looking at this chart over the weekend because it was a holiday. So this is what you're looking at on your hourly chart. Let's just kind of play this up here. So points and flats, points and flats. You can see the 5 EMA changing colors on this candle too. So it's got some momentum behind it, but it's an early cheat for sure, right? Big green candle, break the 20, break the 50. You've got your your buy signal, and you'll see the 500 there. That's the pink line on this time frame, and it's just starting to appear. Boom. And here we are today. You don't think this stuff matters? Of course it matters. The reasons why doesn't matter to me. I don't care about that. It's all I want to be able to do is share with you things like this that will help you on a daily basis put some context around what you see on a chart. It's a nice long little trade. Everyone who trades this is probably a little bit leveraged or a lot. There's your point, right? There's your point at resistance. First touch, rejection.
It was the rejection of a lifetime, Blunt.
It was a major rejection. Now, and you can see this thing, impulse down. You don't challenge like we saw in some other charts, right? Where, you have a big green candle that challenged these levels. Maybe it's still faded, but we didn't have that. Like, so that to me is a little more bearish. And then you can't break these levels for a while, and it just continues to melt. At no time in all of this did you get a buy signal. This was just a big rejection at a resistance level. First touch of the 20 on this time frame. Boom, rejected. Second one breaks. Buy signal, break the 50. You stay in the trade until you're told to leave. Or you feel, using your own judgment that it's time to leave. But our job is to get you in the right place at the right time so that you actually have an opportunity to make those decisions, as opposed to just going, I don't know what's going on. I was long, and then the market started to pull back. You know what I mean? This same constant thing of indecision. This is resistance. Resistance, resistance. Now you're starting to get a break. We'll see, right? You have a buy signal, that's great, but this candle's got to hold. You want to close above the 50. And when you do, what's above you? Let's look at our volume gap, our volume profile. A little volume gap in here to the upside, which should help you find this high. Oh, and where did it pull back? Oh, those two equal tops. Actually,
I'm glad we're on Astro because honestly, this thing does move and like come back to life and it prints. But after that wipeout, honestly, I've been a lot more cautious. I've been watching the market. This is very choppy. It's going to the right, but at some point it would be nice, to catch that upside and trade some of these gaps to the upside. But, you know, some of this market is kind of shaky right now, right? It was like, man,
yeah.
so this is one that I'm looking at personally because I do want to catch this rip to the upside if it does even exist, right? It possibly just hits this 200 moving average that's coming up and just rejects and goes right back down. But
So you're making this is a really good conversation to have. Maybe this is not the best asset to use it on because there's not a lot of history here, but um, when the chart fails, like it did here, this is the 12-hour. I was trying to get to a daily, but it's not quite there yet. When a chart fails, right? So this is everybody trying to long, right? Thinking that it's a recovery. They see these opportunities on those short time frames because they'll show themselves, right, pretty clearly. But if you enter those things with the understanding that it's going to be a super long, that's probably wrong, because you have to respect what you see on the chart, right? This resistance here. This is a green candle on the 12-hour, but it hasn't changed trend yet. So on the daily, like we showed on XRP, where you had that kind of big gap there. This area, here we go. This here, right? This is easy to spot on those short time frames, but look what's happening. The resistance that you're finding. So you can look for an opportunity on those shorter time frames, which is great. But the confluence of those moves is really key. 1 hour, 4 hour, daily kind of confluence, then you're on to something. When you see your dailies that you're hoping to get confluence on look like this, where you've got this divergence and then this rejection and rollover, probably not going to happen. At least not today. So yeah, people are, and I'm no different, right? I'm on a short time frame looking for a good trend move, trying to get something long into those gaps, right? But they're going to make it hard to reach those gaps above you. Let's see what's on what's up here on Bitcoin. The gaps actually the big ones are down here. They're going to make it hard to push this price up here. They're not going to make it easy on you. That's for sure. Look at all, because you got to remember, everything, because of what happened on Friday, so much of what was once support is now resistance. And you haven't had an opportunity to feel what that's like in a while. Look at this 1 hour. Like, there's obviously resistance at this level. And this was just, trying to break through and then just being completely rejected. The point of control is in here as well. So where are you going to find big moves up and down or changes in direction? You're going to find them at areas of support and resistance, or those levels that we've talked about that we deem important: upper value range, lower value range, point of control, major moving averages, benches of past price, VWAPs, all that kind of fun stuff. 1 hour BTC, clean move down, right? This is your sideways. This was your sideways action. Nobody wants to take it higher. Price rolls over. You break the 20, you break the T line, you break the 5 EMA, and you break the 1000 EMA and the point of control. Don't get any support from the 50 at all on this time frame, and price trades below these levels. As long as price is trading below these levels like this, you're short, and it's a momentum move. A little bit of consolidation for a bit. Those are two equal bottoms. 5 EMA starts to turn white, which is telling us there's money coming in. And here's the doji at the bottom of a downtrend, telling you that's probably a reversal candle to the upside, and you get a little bounce. But is this just a wave down, a retracement higher that fails, and then you roll over and come back and the trend down continues? I don't know yet. None of us do. We really don't. We just have to follow the chart. But it's really helpful to have an understanding of what the heck is going on. Because without that, that's when your brain goes crazy. You're more inclined to make mistakes, all of that stuff. Oil is something that we talk about in here quite a bit because it really illustrates how we do stuff and why we do things. This is the daily oil chart. I've taken the volume profile off because it doesn't like it on this feed. But what do you see here? A doji at the top of a move higher. Here's a doji at the top of a move down, indicating that maybe you're moving higher. So you do. Here's a doji at the top of a move higher that comes at resistance and the 50. Whether you want to deem the 200 on this time frame or the 50 as the resistance, it doesn't matter. They both count. What happens? Price fades. There's another doji at the bottom of this wave. Slight retrace. Where does it come? Finds resistance at the 20, rolls over yet again. And again, and again, and again. Break one level, find the next. 61.66 was the number we had at 93.50. Because we understand that when we look at that chart and we see another example of a doji at the top of a leg higher, trading well above all your support, I don't know, as a technician you go, wow, maybe we're about to start a leg down. Not thinking it's a total and complete capitulation. Is all I see is the doji at the top of a bull run, and we're trading above everything that I would deem as support. So you start naturally thinking, well, okay, if we break one level and we find the next, ultimately, where could we end up? Well, current price revisits past. There's your bench of past price. Do you know for certain that it's going there when it's up here? No. You have no clue. But you do know how money moves and how the markets move. This is the fingerprints of money. And they repeat themselves. So understanding how price moves, fail one level, find the next, so on and so forth. And when all else fails, when you have no more moving average support, what are you looking for? Past price. There's past price. Oh, and by the way, that past price, Rico, to our earlier point, lines up with areas where the 5EMA points out and comes into contact, both as support and resistance. That's why that line is there. That's it. It's as simple or as complicated as that. There's your move down. Didn't go on to make $100 and make new highs. The doji proved, just like all the others did, that there was something happening here. And there was. There's your divergence. Price goes down, break the 20, break the 50, come back to the 1000 MA on the weekly, which represents like probably 20 years of price history in some context, and then you bounce. The 200's there as well. Lots of support, right? All these wicks that you see pushing price higher. And it bounces to where? Up. That's where we drew the trend line. As soon as we could connect those 2 points, we made a lower high. Let's pay attention. Oop, here we go again. Wick this level. It's not going straight down. Like, yeah, so do I think it's lower than 93.50 or whatever it was? Yeah, but it's not going there in a day. It's the ebb and flow. Inhale, exhale. Right? There's your wick hitting support. There's your pop up hitting that trend line yet again and doing what? Making another lower high. So what's that telling us? It's just telling us that the trend we're in is still intact and the trend is down. And all through this up and down of price, and again, this could be Bitcoin, it could be IBM, it could be Nvidia, Apple, it doesn't matter. But I can tell you one thing, there's a million people giving you a reason why they should be bullish on oil, which is fine. Have the opinion. But at the end of the day, it's the chart that matters. It's price that matters, not the opinion. Even if they've been in the oil business for 50 years with great experience, and I respect that. But price tells all. Price tells all. Lower highs, breaking support levels. This was key, breaking 1,000 days of price history on a weekly chart. The hell did you think it was going to mean? It's not good. Break one level, find the next. Here we go. This is why we do this, so that we can see in near real time how things work out. Sometimes we're right, sometimes we're wrong. But now that we're down here, we know that price has to figure out what to do next. This is where things got a little crazy for a while. But what happened? Big rejection, right back down to the 20. And here we are today on the weekly. So what do you think price is looking for? So this is a failed breakout. We're rolling down. We're probably looking for the area of the previous wave's low. But what do we really think it's looking for? Actually, let me condense this a little bit. Just so you understand that it's not outlandish that price comes back and checks this level on a monthly time frame. It's done it here, it's done it here, it's done it here, it's almost did it here. And this is when it first starts to appear back in 1993. Some of you weren't even born then. So what do you think it's looking for? It's failed all the levels that we talk about. Break one level, find the next. I believe it's looking for somewhere in here. Now, do I sound crazy saying that? At $58 that it's looking for 47 and change? Probably, but I sounded crazy at 93.50 telling you that you'd see 70 and 61 before you'd see 100. So let's not laugh at ourselves. And no, it's not like we're sitting here, if you say something long enough, eventually it's going to be true. That's not what we're doing here. What we do here is we walk you through step by step where price is likely to go if X happens. Both up, down, and sideways. So look at the T line and the 5 EMA on the monthly. It didn't give a crap about these three candles. Three green candles. Didn't give a crap. Hit our level that we've had there for ages, and boom, capitulated again. Now people are going to say, well, why? I don't know. Don't know. Why price does what it does. The why part is not important to me. It's having the ability to see it before it happens, or as it's happening is more accurate. So, we're all, your thesis is in play until the market tells you it isn't, and it's not a knock on you when you have to close your trade because the market's turning around. That's okay. That's why we do this. We're traders. That's what traders do. But I don't get hung up in the what people are saying about oil or Bitcoin or interest rates or gold or whatever. The chart will tell you everything you need to know. Everything that you need to know is on your chart. The market discounts everything. All known information is factored in, as technicians believe. We had a big dip on Friday, and look at this. So all the drama from Friday that lasted over the weekend, the conversations that took place, some people thinking that it's going to be the end of the world, some people thinking that it's going to be the opposite of the end of the world, and everything in between. And that'll make your head spin. The only thing you should be doing, in my opinion, is watching what goes on in the chart. Have a good understanding of what's going on in the real world. Think for yourselves, but have an understanding of what's going on the chart, because that'll take out all the chaos for you. Right? Back this chart up. Does it look bananas? Sure. What's this candle looking for on the 4 hour? The 50. Right? This is an important 4 hour candle. You can see here it had one attempt and failed once it broke it back here, but there's your first test of the 20, essentially failing it and bouncing. Now testing the 50. This is kind of what you would hope would happen. You just don't want it to happen with as much volatility. But please understand that price is going back to the places that we deem normal and acceptable. They're just doing it with elasticity and velocity. Those volume gaps that we talk about. So how did this gap get made? Got made right here. Right? Those big red candles are the things that created that volume gap down. And what's happened, is that you're now came back to the point of control, and that's where the move came from. Snap back right to the, sorry, that's lower value range. That's snap back right up to the point of control in the 50. It ain't pretty, but it's what you could expect to see. What do we want from this candle? Well, you'd love it to break the 50 to the upside, but you understand it is a first touch and it could see a little bit of resistance there. If it breaks through, well, then it's going to look for the previous levels to the upside with the ultimate goal of taking out the previous wave's high. And it's just rinse, repeat, rinse and repeat, rinse and repeat. We just keep performing the same actions over and over and over again. As crazy as that sounds, let's look at Solana as well. Solana, perfect example of here you've got the 200 MA and the 500 MA on the daily, and it does act as a level of support. The impulse down broke all the way down to the lower value range and snapped back. But we're still in a bearish trend now. If I blow this up, you're going to be able to see what I mean. There's our big impulse down, which opens up the distance between the T line and the 5 EMA, showing us that's momentum. Here's your attempt to challenge and fails, or at least is on this candle is failing. And the divergence is still there. This daily candle, do you want it to close below the 5 and at or below the POC? No, you want it to close well above it. But you can see there's still the draw there, and if it does fade, don't be surprised if it comes back down to visit those previous waves lows, which are at what level? 177. Didn't we talk about that level, Rico, last week? 177? That seems to ring a bell.
It rings the bell. It's crazy how that one keeps coming
That
back.
was a
That's the
level
price
that you
up.
talked about, actually.
Yeah, it's wild.
Yeah, so
Shout out to you though. I got that from you. I had to look backwards, man. That's what we got to do. We got to zoom out and look backwards. Like, what's going on with this 177 all the time?
yeah. Well,
I was telling
interesting.
people on the live stream. I was telling everybody. I was like, we're not just snatching these numbers out of the air just to pick a number. Like, I go on some spaces and people are like, "What price you're going to?" And they're like, 230 something. They're just like, I don't know where they're grabbing the prices from or whatever. But it's like, I'm grabbing these prices from historical data. I'm not grabbing them out of thin air. I'm grabbing them from looking backwards and seeing if time and price is going to match up again. That's
Yeah,
why we bring up these prices,
yeah. It's
not out of thin air.
people make it sound like an auction sometimes, but
Exactly,
this
exactly.
this
35,
week,
235.
believe it or not, like for as much of a hit it's felt like Solana's taken, you haven't printed a sell signal on the weekly. Like, do you have the divergence down? Yes, but you haven't printed the sell signal. And notice that the 20 and 50 MA are down here, giving it the support that it really needs right now. If it was to break this though on the weekly, that would be problematic. And you start looking to the down and to the left to where price has been before. So this is actually again, felt like the sky was falling, but on a weekly chart, you're just getting support from the 20 and the 50. Context is critical. When you go parabolic, we talk about this all the time. Here's a good example. This is a company called Granger. You may or may not be familiar with it. They make basically materials and parts and supply the construction and manufacturing industry. And the Granger chart is an example of when you go parabolic, what happens. So we talk about all the time that when you move higher, it spreads out all of your MAs. And these MAs represent past price and time. And when price comes back to check them, after this parabolic move up, that will feel literally like the sky is falling. Break the 20, found the 50 for a few weeks, broke it, find support at the point of control, but you challenge and you just can't, here's your lower highs, right? It's going to feel incredibly painful as something like this retraces. Like, it'll make you feel like you're going to go broke to watch it do this kind of thing. Now, this is a weekly chart. It does take time. I understand that. Look how important it is to hold this point of control on the weekly chart. with Ranger. If it fails the POC and falls into this gap, there's a real good chance you find the 200. But all of that to the downside will feel incredibly heavy. But this is what a chart looks like when it's gone parabolic. And as it's going parabolic, from down here, nobody is thinking about the trend reversal that will come one day. Nobody's thinking about it. Right? Is all they see is price going up. So this is the first opportunity to see, price pulling back a little bit. So maybe somebody can mute their mic if the mic is live. But yeah, that's what
Mikey,
you're
your
looking
mic
at
is
here.
hot. Mikey, you got a hot mic.
Oh shit, my bad.
So this is what a chart looks like when it goes parabolic. And when it comes back to start to check these levels, it's going to feel like the very, very painful. This is a long-term view of what it looks like when you're trading above the 20 and the 50 and the 200. Because again, this is a weekly that's just gone straight up. Very organized retracements that find support where you expect until up here, then it starts to break down a little bit. But this is what you look for, right? I look for things that look like this and on purpose, just so that I can capitalize on these moves. Where did the all-time high happen? Right up at the upper value range on the volume profile. These things we show every week, you guys can be looking at them all the time. This volume gap, you know the danger. The 200 MA, you know, is a draw for price. And the list goes on and on and on. And if you were to draw fibs on this thing, who knows? I don't even want to look. But I think that you would see that you're well into only the mild part of what could be a larger retracement. And after the sky's falling feeling, look, the market's gone green, right? The stock market's gone green. And these ups and downs, the only way you're going to be able to manage them is just by simply monitoring your chart. Multiple time frames, like we showed on the NASDAQ 100, so you can catch those moves as they start. Some of them will turn into runners, like we showed. There's your daily. That was your 1 hour. You might not ever see a move like this again in your life. Like, that's how dramatic that move was. Certainly be a long time coming. Right? So now you've broken here on the 1 hour. I think we were looking at the 4. Here's what there you go. Trying to test the 20. Still haven't printed a buy signal yet, though. Even with all this move higher and this move higher, still haven't printed a buy signal. And that's a testament to how much velocity and momentum was on the downside. Because price, even as it's recovered, hasn't been able to pull those up over to start to trigger. So believe it or not, this is still a downtrend, even though you've got this massive green 4-hour candle. These are the things that the market tells us is going on, that if we choose to ignore them, it's usually to our detriment. Look for risk first, and then the opportunity second. And after a while, what you'll just notice is that you'll just start making better trades. If you get a rejection here, could you expect another move like this one that moved down? Yeah, probably. That's how crazy a world we live in right now. But this has been one heck of a move. Zcash, which gets a lot of attention lately. Over the weekend, I shorted it. Probably up in here. But it's still bullish, right? Bullish daily chart. Nice buy signal. The divergence comes in the T-line and the 5, so you're on the right side of the trade. Even these 2 red candles didn't change trend. There's your another equal bottom. Boom. The move up continues. Even though you had a little fade, only the fade came back to the 5 EMA, which is a bullish expectation. Next candle's green. Little weak, right? wick through and then pop higher. That's actually, I see that as more bullish than bearish, even though it wicked down like that. So don't get too riled up and upset when this stuff happens. I know on paper we lose money, but just let the market come to you. Don't be irrational and don't try and chase things, especially now, because if you chase stuff, chances are you're going to get run around in circles, and it'll be a problem. Just follow the charts and drop your time frames as you need to figure out what the heck is going on. This is Monaro. Same thing, 2 equal tops. This happened to come at the upper value range, and then price collapse all the way to the 200. Now, could it have taken 3 or 4 days or 5 days or 2 weeks to make that move? Yeah. It just decided for whatever reason to do it all in one day. But the fact that you got your support there is actually a good thing. 3 candles bounce higher. You do not change trend, however. And here you are fighting to stay above the 5 EMA and the 20. And if you fail it, well, you come back down to these levels down here. Revisit the previous wave's lows, and with the 50 and the 20 or 200 rather being serious draws for price, that could happen. Eat up this wick to the downside, and that's how you get back down there. Link is another one. Like all these charts, I don't want to say they all look the same, but they have similar looks. 2 equal tops at the 50. That would have been, enough for me probably. First touch, 2 equal tops. Price collapses. But when price collapses, it doesn't mean it stays there. You've been able to get price back up to the 200 MA and above. Will it stay there? I don't know. These are the candles that throw everybody, though. The 2 or 3 green candles that come after a big move down. Oh, the bottom's in. I'm long in those candles. I'm all in again. All right. And then this happens. And then the thing reverses itself. If you were to long those candles, you've got to do it with the understanding that you haven't reversed trend and that you're actually going against trend in that move. So unless you have something that I'm unaware of that makes it a higher probability trade that it's going to break through that I don't see, you have to look at that as serious resistance and that your trade could end there. I see it so often. Everybody sees, oh, a bottom's in, we got a base, boom, you long the candles, and then, a few hours or a day later, you're upside down. That's because you longed into resistance. You went against the trend. And it's going to be hard for people to lay off right now, thinking that you're buying the dip. Most people weren't aware of what was going on even as price was collapsing, and in all likelihood didn't buy the dip unless they had preset targets, because they're too freaked out trying to figure out what was going on, and were too afraid to buy. Well, saying buying the dip is one thing, actually doing it is another. But if you did buy the dip, you got to make sure that it is an actual low. We're not sure yet. And I think, Rico, you've been doing a real nice job on your stream of walking people through this kind of stuff, a little bit at a time. So kudos to you.
I appreciate it, bro. We get to refine it here with you, and we're living it every day, so it's really nice. And I get to show my own mistakes that I made throughout and how have I been adjusting them. I think that's what helps me out is, just learning with everybody at the same time. And we all have to adjust, right?
Yeah.
we all see these opportunities, and you talk about you feel like everything was upside down over the weekend. Everybody was walking on their ceiling. That's how upside down things were, right? It's
Yeah.
like, but these things will help you out. So, yeah, practice makes perfect.
This is NVIDIA. Like, if you were to go off of what you heard on Friday and even leading up until, yesterday and today, it was complete and total chaos and disaster. And that's why I need to look at a chart. Like, someone can say, oh, the market was down X%, but I got to see it on a chart to see what it actually means. So on the daily chart for NVIDIA, you have this big dagger that, wicked the 20 and found a little support. The current candle is basically sitting on the 20 and at the base of that previous candle with a sell signal. It took a few days for the sell signal to show up on the daily, although it has found support at the 50 and stuff like that, but which is good. But it is printing a sell signal. How could we have seen sooner what was coming? Go back to the 1 hour or the 4 hour, whichever you see. There you got the big point signaling a change in direction, 2 equal tops. The 1 hour all the way to the 50, like, this is still a downtrend, even on the 1 hour. That's how intense that move was. That's how much momentum it had to pull price down so severely that even with this move higher, it hasn't changed the trend. And you can see what was the resistance causing it to fail this breakout. It was the 50. So you can see things before they happen on another time frame. Right? Are you looking into the future? No, you're just actually looking inside the time frame that you're living in to see a different look at what's going on. So NVIDIA's chart, this 1 hour chart, was a big capitulation down. The snapback basically took you to the 50, you wicked the 20 and failed. Sideways, sideways, sideways. All these big wicks are being pushed down, right? That's what that is. And then price fails the 50. Took out the previous wave's low. But you're still, even with the snapback, so this impulse down, did you notice this green candle didn't reach the 5? That's weakness. And now you're fading it. With this gap down here. And there's going to be some gaps to the downside still, because the big wicks that were created on the dailies would have created some sort of volume gaps to the downside that are still there. And you'll see them, right? Like, you'll see them on your charts. If you have any tickers you want to look at, just blurt them out, because I'm sure there's charts that just look absolutely.
I like to look at D Wade. My friend, he can't stop smiling. He goes to sleep with a smile on his face. He wakes up with a smile on his face, and we're just super happy. I mean, he's been doing really good, and it's pumping up some more. What was that?
What's the ticker?
D Wade. So it's QBTS.
Oh, QBTS. There we go. Boom. Still moving.
Yeah. That orange line is when we started talking about it down there. It's wild.
Yeah. So, nice base that it made in here. There's your buy signal, and it's just been straight up. Even these retraces didn't break trend, right?
Yep.
And still moving higher. Now,
during those retraces, we had talked, and I had actually used we had went to a hookah lounge as we hang out and take our laptops and stuff. And that's one of the things I was saying. I was like, man, on your daily and, you like to hold. I was like, even though it's pulling back, it never printed a sell signal. So you might just want to hold. And both of those times he was like, man, I'm so glad I met you. I was like, whatever. That thing just kept going up.
Yeah, it has. And, there's the weekly. And look, these things are going to move higher as long as the money's coming in. And as soon as that slows down, you'll feel, you'll see the fade, and you already know where it's going to fade to, right? The first level will be the 5 and then the T line. And you'll be able, like, even if it was one big red candle, Rico, that based out right at the T line, that would still be bullish to me because it didn't break it.
Right.
So you can just anticipate when it does pull back, it'll pull back to these levels here, right, where we've been before, probably in here too.
What prices are those?
26.80 and 33.13, or
Got it.
30 and change. But the idea is, like, the good problem to have is to figure out what to do at an all-time high. Our job is to get you in the trade early so that you can actually have those decisions to make.
Hey, could we look at this token? Is KGEN?
Okay. Okay, so it's pretty new. So we're gonna have to go to a 1 hour, see what we can see. So you're gonna hopefully, what you want to see here is, if you're long, you want to see if there's support at the 20. So there's a nice clean buy signal. There's your doji at the top of a move higher, indicating that it might be done. 5 EMA turns red, showing us that there's the money's coming out. You can see it's getting a little bit of support here around the 20, and that would be a first touch of on this time frame. So you would hope that it gets a little support. If it bounces, you look to take the previous wave's high. If it fails, you just look below. And then change your time frames as need be. It's going to be hard though, because it's a new issue, but your 4 hour is still holding the 5 EMA, so that's bullish. Put that in quotes. You're still holding, all this divergence is in place, so it's still bullish. These could just be red candles in a further uptrend. You just keep, you just dial it back to see what's going on a shorter time frame. You want to make sure that you get support here. If you don't, then it makes that 4 hour look ugly, and you'll probably get that sell signal on the 4 hour. Fail the 20 on the 1 hour, you'll get the sell signal on the 4.
Fair enough.
Right?
Thank you, Mr. Blunthouse.
No.
Always an honor.
Love having you in here, brother.
Love being here, man. Appreciate you highly, bro. For real. Rico, what's going on, Rico?
Doing good, man. Getting all this wisdom from this man right here. All this, they say the game is sold, not told, but Blunt's over here telling everybody, so I'm just writing it down.
It's, we're just doing what we're told. That's all. Ave's another chart. Daily chart shows resistance at the 50. There's your big red candle, the 2 equal tops candle. That always gets my attention. And, a couple days later, you're confirmed and price just rolls over. Big wick down, somewhat of a snapback, but it seems to be failing at the T line. It seems, that's not what you want to see. And it's going to be hard for some people to watch, right? Like, it is. It really is. CFX. I think Aster's probably taken a lot of the traders away from some of these other alts.
It sure did. We were looking at CFX, me and my friend, because he was actually thinking about just we're thinking about like putting like, I don't know, like 20 in a like spot just because we knew that it could possibly recover CFX, once it gave us like a decent signal because the volume's been so low on it lately, right? Because of Aster. So it's just like, we know that it will recover and it's probably a good play because it is a blockchain token. Not trying to get too caught up into that, but it is to China. Eventually they're going to hit the switches and turn things on. So it's like, do we put 20K behind CFX and just let it cook? And, it turns into, because it's super oversold right now. But yeah, Aster's been taking a lot of the action. The volume is just so high, the attention on it, the fact that people are using the utility right away. Like, they came out with the decks and people are, that it's tangible, that helps out quite a bit. People are trading on that Aster decks already. So that helps it quite a bit as well.
Yeah, I haven't been on there, but I'm sure I'll find my way at some point.
Yeah, same here. I want to, because this connects straight to your wallet, which is pretty interesting, because during the wipeout, and we're always straight up with everybody, Blunt. I think this is why we're always good. And if you guys are listening to Blunt House TA right now on his X account, please give this man a follow. Share his page. It's very crucial. I'm going to be very lucky to have him on tomorrow as well, 3 p.m. Eastern time. So make sure you guys don't miss out for that. But yeah, when it comes to some of these plays and when it comes to like Aster, what it kind of showed when that wipeout happened, a lot of exchanges weren't letting people do things, and it showed you what liquidity pool they're all using. A lot of people are not talking about this because it gets the market kind of scary, but because deposits couldn't be touched, withdrawals couldn't be touched. I mean, some of you have to relog back in and all this stuff, but this is where I see something like Aster having enough power because we're talking about decentralized leverage trading, where if it's running on the blockchain, then there's no reason why it would ever shut off compared to, a centralized exchange and stuff like that. So it is opening up what people envision for crypto kind of early on in the early days anyway. So there's some things that we should go over when it comes to like Aster and what it's actually bringing to the table, because Friday highlighted a lot of things that showed crypto is still very young, right? The way it halted and things happen.
Yeah. No, it's, maybe we can even talk about that tomorrow on your stream a little bit.
Absolutely.
Just trying to illustrate yet again, this is XDC. It's one of those coins that's kind of in that ISO 9002 world or whatever. It behaved just like everything else, right? Big impulse candle down. This one again nearly hit the 1000 MA, bounces up. But look, it bounces, yes, but price didn't break any critical levels and it's still trending down. So I think there's still a little bit more exhaustion here. I'm not sure what it exactly looks like, but it doesn't appear that this is finished, whatever this is. In regards to what happened last week too in the whole stop loss thing, I never personally had an issue with stop losses that day at all, or any other functionality for that matter. But I understand there are people that did, and I'm sorry that happened to them. But it doesn't mean that you just don't use stop losses. Because there's a lot of screw it doesn't matter anyways. Well, yeah, it does actually. And I question how many of these people actually had stop losses in place. Because I actually think it's a nice story when you've lost all your money to say that the stops didn't work. There's a lot of that too.
I'm sure there is.
Right?
I'm sure.
Because I know, just from talking to a lot of these, you guys from time to time, that you don't use stops as you should, right? So when moves like this happen, everybody gets wiped out. And yes, when there's thin liquidity on alts, can it make that stop level questionable? Is there enough there to trigger it? Oh, that's real. But you have to use stops because you got to live to trade another day. And Fridays, to the people that closed all their accounts and, got off Twitter and whatever because it was a disaster, probably not running stops.
Yeah, I used a lot of the stuff that we learn up in here. We talk about managing a trade and everything like that. I was in the green and I took some profits off my trade and that thing turned around and something that came to me that day was like, you never know what red signal or sell signal is that one that flushes everything, you know? So you want to respect them, you know, it's like you want to really respect them. And if I had not been, you know, I think so refined to the level that I am now, you know, maybe I could have got wiped out at some point or something like that. But I was able to manage the trade, you know, and that's what this stuff is really about. It's not just always about, you know, can you make money on the chart going up, or can you make money up, or you're shorting it. It's about like managing your risk where you can like live to trade another day. It's like, can you do that? Because then you really got something going for yourself. Because yeah, it sucks. Okay, it's one day it happened, but you don't have to delete all your accounts, and you can
Yeah.
still, you
Yeah.
know, you know, So yeah,
Spy, right? There's another real good example. Like, you can't tell me that these measures that we use to help us track price aren't meaningful and don't work. Sure, they work. Like, look at today. Look at today's candle. What do? You came right back. You wick the 50, basically the close of or the low of that big red candle, and you push higher. I understand there's no buy signal yet and all that kind of stuff, but you can expect these levels to get tested. So if you're in a trade, let's say you're short right now, you have to be aware of the upside risk and what those levels are. Let's say you were short SPY. Well, you want to make sure that, at 664, you have to understand that's the 5 EMA. If price is going to come back up and challenge that level, then you might have a problem. So that's why you need to make sure that you're looking at those daily charts, 4-hour charts, so that you can see where the support and resistance is on those other time frames, or what price might be looking for as a target. If you were longing this chart, hey, you would probably have the T line or the 5 EMA as a target, even if you were on a shorter time frame. And the same applies to the downside. Because that's, a test of the T line on the daily is normal. So if you're short, that's what you have to be aware of, is that test of the T line or some of those other levels. That could make you have to wash your trade. Or maybe you'll realize you're on the wrong side of the trade. The price will be looking for something on the daily, so if you're trading the shorter time frames, be aware of what those levels are. Like, quite often, I'll put a little marker of where the T line or the 5 EMA is on the daily chart, so that, and it'll stay on your chart, so that as I break time frames down, I know I can see at a glance where that level is. And it just kind of helps me put some context as I try and assess the risk and opportunity on that particular asset. Let's look at gold. Gold again is just taking off. It doesn't seem to want to take a break. And if it's being fired by chaos, which it often is, well, that makes a lot of sense, doesn't it? Because that's kind of the world we're living in: indecision, chaos, and questions. Gold responds accordingly. Right? Already printing 41 and change, 41.50. What's the limit for gold? I don't know. Right now, you're into pure price exploration. So as long as we have the conditions that we have in the world, there'll be pressure on gold's price to the upside. If things were to calm down, maybe it would fade a little bit. But right now, this is a bullish chart. And this, all we have to work off is the chart. And the weekly gold chart, look at these beautiful moves that you get from support. Off the 200, off the 20, off the 20 again, off the 20 again. And you just get these continuations higher. Still a bullish chart. And if it's to fade, just like on that D-wave chart, if it's to fade when you see this big top up here, well, you're looking for the 5 EMA and the T line, that area, for some support. And ultimately, if you might have to come back to the 20. But right now, this is a bullish chart. And every retrace is pretty modest. It's not all that hard at all. And this one just went sideways, for lack of a better explanation. So there's still upside potential to gold. Look at the moving average and signal line on your MACD. Still diverged higher in opening. Same with the Fisher. And the stochastic RSI can stay overbought like that for long periods of time. It's just telling us that the buyers have not left the building, that they're hanging around. So this is still very bullish. So in other words, it seems that gold wants to continue to move higher. Silver gets a lot of talk too, and I don't think it would be fair if we didn't include silver.
Yeah, silver keeps going up. I found a abandoned silver mine in Arizona, but this was back when silver was trading between $23 and $26, so it wasn't that relevant. But if silver continues, we might be packing up and going back to Arizona pretty soon. Because I mean,
Yeah.
it's an old mine, and I was nerding out looking for mines before World War II,
Oh, really?
just in case, like, yeah, just because like that, the odds of somebody like coming back is very slim. So yeah, I was going like GS reports, all kinds of stuff. I dove deep into it, but we might be going to the silver mine. So let's see what numbers we got, Blunt House, for the
It's
silver trading
it's
higher and higher.
yeah, it's still a bullish chart as well. And you look at the support you get from the 20 and the 50 in here, and the move came off a ton of consolidation. Basically, the 20, the 50, and the 200 all twisting together. Like, that's an explosive move whenever you see that up or down. And you get a buy signal and price just popped.
Yeah, and something really quick with gold or with silver, because I've been watching it because, like I said, I nerded out in AZ when it came to like precious metals and stuff like that. But silver has went all the way up to the top 10 as far as overall like market capitalization. Like when I was talking about this stuff and it was like trading in the $20 range, like I talked to my brother yesterday because he's doing really good and he had bought a good amount of silver. But now it's trading, it's at top six is market capitalization. Like it flew from like the 30th spot or something like that. Like
Mm-hmm.
people are hip to like there's a lot of volume going into, the silver price going on right now.
No, absolutely is. So here's a great example of price going parabolic and pulling apart all of these levels. So when price does retrace, it's already kind of shown you how it's going to do it. It tests the 20, the 50, and whether you get a breakdown or not is another story. But these are the levels that it'll come back and test. It's just going to feel real painful because the trend for so long has been in one direction. And this is kind of what happens. And it's the first couple moves that always feel the hardest often, because sometimes you get so far above the 20, 50, and 200 that first wave down can feel like really terrible. But we're not there yet. Even on silver, like, you came back and you tested the T line, right? But didn't divergence doesn't break. Your trend is still good, right? Until it isn't.
Is there any way we could take a look at nickel? My bad.
Yeah. Uh,
I forget that TG just hit the mic and it stays lit. But
Nickel futures. There we go. This might not be the greatest chart, but so this is a weekly, and you can see the flat trading here. So you're vulnerable to the downside, to taking out this wick kind of touching down here. To the upside, if you were to get a break, you push past the 50, and then all of this is air, right? An opportunity, but I don't think we're there yet. Yeah, we're still have a little work to do. The thing with a lot of these metals is that they're getting brought into the rare earth conversation, I believe. And in doing so, I think that's putting pressure on their charts to the upside for gold and silver. Like if you take away that rare earth narrative and
Yeah.
conversation, I think you
Yep.
might see a little more of a restrained move higher on gold. I shouldn't say restrained, but not quite as parabolic ish as we're seeing. Because I think it's getting drawn into that rare earth conversation now too, and that's putting more pressure on the chart to the upside. Just a theory, that's again, we're technical people here, but I don't think that it hurts it to be pushing price up and talking about it in another way other than just a safety trade, right?
Exactly.
That it actually
Exactly.
has an application in its
Yeah, it has
so
a extra narrative tied to it.
yeah. But it's the same
Yeah.
as silver. It's just like, it's price exploration at this point, and it's just a matter of time before it tells us when the top is in, or the top for now. But again, as long as these kind of chaotic conditions are top of mind, I think gold and silver continue to do well. Palladium would be another. For futures. Oh, let's just look at this. Look at this chart. And so here's a weekly palladium chart. And you've got price came all the way back to the 1000 MA weekly, which is like 20 some odd years of price history. You've got the 20 and the 50 tied up all in there as well. Just flat, 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 nothing trading, and then all of a sudden it gets a heartbeat. This is this was the signal that was meaningful. Flat trading for an extended period of time. When you come out of those, you usually pop, and this one does. Like on the weekly, breaking this level, that's significant. Breaking the 200 and the 500 on the weekly, that's a big deal. And you can see what it's done on the daily. Your daily, you got the 20 in here, the 50 in here, even a little bit of the 200, but you get your hop right here. Second mouse got the cheese, buddy. First mouse got the squeeze, the second one got the cheese. So all these metals, I think there's a different narrative that exists to them, just in some of them anyways, as opposed to just being a safety trade. You can see how this market's reversed.
I have one more if you don't mind, good sir. Radium.
Is this a crypto or a?
No, it's
It's a stock.
yeah.
Radium Development? Is that it?
No, it's like it's a metal, I believe.
Maybe palladium but radium sounds like a metal though. Palladium's one, but I could be wrong.
Let's see.
Did you just find this? You just probably just discovered a new metal, Mikey.
No, I guess Russia has like a wild amount of it, but I guess you could check validity, VAL.
Is it uranium?
No.
Is this a crypto or a stock?
Val is a stock, VAL.
Okay, Valeris, is that it? I don't think I have the right ticker. VAL. VALL, maybe? don't think I have the right ticker.
I'll find the ticker for the
Yeah,
radium metal. It's I guess it's over like $40,000 a pound right now.
I don't know what that is. I don't even know what it is. Oops. I don't know. No, if you find the ticker, we can pull it up. But do you guys have any other symbols that you want to look at, or any questions about what you're seeing on your charts? Then we can, kind of address them live. Nobody? All this drama and nobody's gonna.
Everybody's quiet after that shakeout, but
Well,
you know what? Just we're here, but that's it. We survived.
yeah, everyone's afraid to talk because who knows what's going to happen next. This is the Litecoin chart, right? And look, big capitulation. There's your massive wick down, but look where we've kind of settled. This sideways stuff that doesn't break the 5 or the T line is bearish. Again, the divergence, this down trend is still in play. But just another example, big massive red candle, and then you get sideways action, right? Actually, you can't really even break the 200, and this looks like a failed breakout, and it's going to roll. That's what it's looking like anyways. You have to see these daily charts or 4-hour charts start to reverse this trend that you see here. And it's, pretty much on everything we look at. It's going to show the same thing. XLM, same thing. So before you start making meaningful longs, make sure you're watching what's going on these dailies. You might be feeling that, price was pushed down so far that any kind of move up would be easy to get. But you're seeing that's not the case. These are just 3 green candles in a further downtrend. And maybe that, with Friday's activity being so extreme, it might be masking a little bit of the next wave down. People will be like, oh my God, yet again? I'm already numb to it.
How about the total market cap? Total?
You drop down to 3.8 roughly trillion. But, does the chart look any different? Not really. Right? There's your top, kind of roll over. There's obviously your big capitulation down. Another wick that split a meaningful level, in this case the 200. And the candles that followed, this one not bullish at all. And these 2 green candles, what do? Well, they test the 5, the T line, the 200, and the 50.
Can't get
and they
the
all
T
fail.
line.
And they all fail.
Yeah.
Right. So there's a message in that. Right now, if it would have broken out above the 20 and started pushing for the level above, and all of this then becomes support as opposed to resistance, yeah, maybe there's a conversation there, but I don't think we're ready to have it yet. It looks like it's just more momentum down.
But I got a question for you. 'Cause we're talking about this downside. Have you noticed, like, is there any particular quarter that is more bullish, or any particular quarter of the year that is more bearish? Have you noticed any like significant pattern in that?
I don't. I don't have that research kind of available, and I don't pay attention too much to seasonality. There are some things that are going to be obviously seasonal, like retail and things like that, and some agriculture and some commodities. Some stocks will fall into that. But I mean, as a chart person, Like, I just read charts. Right? That's my job, is to monetize the chart. And I'm constantly looking at, longer, medium, and current time frames to try and get an understanding of where, price might be going. But I don't focus on the quarters per se. I guess I'm looking at them anyways in a kind of through a different lens, but I don't focus on which quarters are, more bullish or bearish than others.
January has not been too nice to me most of the time, but we'll see this next January. And I'm a, my birthday's in the later part of the year, so I have like it's easy for me to remember how the markets do pump around November, and
Yeah.
because I'm living in it, it almost feels like a little gift because I love the market, right? So it's like, oh my God, it's my birthday month, and the
Yeah.
markets are treating me nice and stuff, and I'm all on that euphoric high. And then come January, I was talking to my brother last night because he was talking about, everything being up. And I was like, yeah, in your birthday, January, that goat comes around and wants to knock me down or something. So
Yeah.
I don't know, bro. I was like, I'm going to be cautious this first quarter of the year because actually 2025, Bitcoin did the same thing. In February, it started going down, down, down. It wasn't until after that first quarter that was over that I started going up. So what's crazy about data analysis is that it could take 3 years for you to have a good idea of something like that. Like if you're really zoomed out,
Yeah.
but if
Yeah.
you love it this much, it's like I care about it this much. Where it's like, okay, I got the first year that taught me the lesson. I got the aha moment the second year where like, okay, I just went through this thing again. And then the third year is where it's like, can I actually do something with this information? Most people don't want to wait 3 years to see if it's
Well,
valid.
you know,
We'll see.
to give you kind of an example, so I probably got a few years on a lot of you guys. And I've come to the conclusion that you spend, your 20s thinking that you've got everything figured out. Hey, I'm an adult now. I got this. I know what's going on. Then you spend the next decade in your 30s realizing that maybe you don't have it all figured out. And then in your 40s, you kind of go through this period where you're convinced that you don't have it all figured out. Then in your 50s, and probably in your 60s, you try and help other people figure it out sooner than you did. And maybe that's where I am, right? Like, I spent, my 20s thinking I had this shit all figured out. My 30s realizing that I didn't the hard way, right? And so on and so on. But I think now I'm at the point where I just want to be able to share some useful information with you guys. I'm just a guy like everybody else who's been doing this for a long time. And if we can help you prevent making a catastrophic mistake, that makes me feel real good. Almost better than hearing someone hit a home run, right? Like, it's avoiding making the mistakes is probably more important in many respects than the victories. If you keep your losers to a minimum, you're naturally just going to become more successful. Don't spend all your waking hours trying to listen to people that are going to give you the answers. No one's going to give you the answers. You got to figure it out for yourself. You could spend all day listening to other people talk and try and mimic their trades. I'm sure there's people that do that with probably limited success. But I'd rather show someone how to read this language, how to interpret what the market's telling us, so they can make their own decisions. So they don't have to rely on someone else to tell them what they should be trading, when they should be buying, when they should be selling. The chart's going to tell you everything. You might even be getting that information that someone's lifting it from a chart, just like this one. Making it sound so amazing that, oh my God, I don't think I could ever figure that out. Of course you can. You just have to have the right guides in front of you and the right tools in your toolbox to be able to put this stuff together so that you can mitigate risk and make safer trades. That's what these charts are about. is just mitigating risk and making safer trades. When do I buy and when do I sell? Those are the questions you get all the time. When do I buy? When do I sell? Well, the chart helps us figure that stuff out. Like, does buying off the 50 on this chart not seem like a good idea? Pretty simple. But
I found the metal I was talking about. It was rhodium, RHODIUM.
RH. Is there a symbol for it? Can you give me the symbol? Radium Resources? No, that's not it.
No, it's a metal. It's RH. Let me make sure I got the spelling right of it. I don't know what company it's trading under or whatnot,
Well, if
but
it's a metal, it should
it's
have
a.
a contract.
Okay, let me try to find it here.
Oh, when you find
But
it,
it's like $7,000 over, almost like $8,000 an ounce.
Well, if you can find the symbol, I'm happy to look it up. But yeah, so this is really just about you guys being able to decipher the madness and just break the chart down into pieces so that you can make sense of it. Everything that you're going to need to know is on your chart. Whether it's a stock, a commodity, it doesn't matter. It's everything you're going to need is on your chart. Fail certain levels, you look for the next one. If you get support from certain levels, then you'll look to the upside for more of that. It's not that hard. It just takes time and repetition to put it all together and make it into some sort of a sensible piece of something that you can break down and understand. Don't get whipped around in the conversational narrative of sky's falling, no it's not, yes it is, no it's not, yes it is. Just let the chart guide you. Use your time frames. In markets like this where you've got lots of volatility, make sure that you're running stops that will secure any major losses before they happen. Tighten them up a little bit if you think it's necessary, or if it's in your interest. That's what I do. Let's say I'm long on this wave right here. Let's say I got in here, for example. This is an ideal place to put a stop because you can see that if price was to break through this base on these three candles, it'd probably go into the downside. But I'll put a hard stop in as soon as I get green, or as soon as I'm, even I don't want to lose anything, so I'll put a hard stop in. And as price climbs, if I'm long, I'm going to move my stop up. And I'm going to lock in my profits as I go, or use a trailer. And what levels might I put my stop at if I'm trying to be really tight? Well, you know what? Probably the T line or the 5 EMA in here. Like, do I want to see this thing eat me up? No, I don't. Right? So we can kind of see that if we break the T line or the 5 EMA, we're probably going to go farther. So I'm going to move my stop up to in and around those levels, but to the point that if I was to get not right on them, usually leave it, in this case, I would just below, in case you come back and hit it and then price tags and moves up. But that's where I would just continue to move them up using the same rationale. And if you get stopped out, you get stopped out. That's okay. Like right now, having tight stops is a good thing. And it doesn't matter what you're trading, up to the upside or the downside. Like price just doesn't fluctuate up. It can fluctuate down, as you can see as well. And you don't want to be there on the wrong side of it when it happens. And you guys know what the levels are to check for. Like, really, there should be no surprises. No surprises. Right, there's the NAS 100 charts. What's price doing on the 1 hour? Impulse down. It's challenged the 50. First attempt failure. Going to go back and get some more flowers and chocolate. We're going to try this again. This time you break out of that 50 level. What are you waiting? You got to see if it holds, right? So it's kind of creating a little bit of a level area here. We don't want it to roll over, but that's what's happening. This would be the next level up, right? Take out the previous wave's high, and there's the 200. Breach that, and then you're looking for the previous wave's high again. This is what the same move looks like on the 4-hour chart. This big green candle here are these 4 green candles here. These 4 green candles up make up this one 4-hour candle. All right, and here we're looking to see. Notice that you don't have a buy signal on the 4-hour chart yet. You have it on the 1 hour, but you don't yet have it on the 4-hour. So you don't necessarily have confluence to the upside yet on the 4-hour chart. Right? Here's what it looks like on this, all this move looks like on the daily. There's Friday. That was yesterday. Just basically making your way back to the T line. And then here's today, kind of just a really half-baked doji. So what do we look for on the 4-hour? I'm looking for a buy signal that will trigger this buy signal on the daily. The other side of that coin is that the 1 hour starts to show weakness and breaks all of its support here and takes out that previous wave's low at 24.4. Same level here. So if you don't get a buy signal and this thing rolls over, look to the base of those candles. And the daily obviously has still a lot to show us. But this is the inside look at what's going on here. So if you get a buy signal on the 4-hour, that's usually a good sign, which might trigger some sort of a buy signal on the daily as it starts to move up. You're still working under sell signals, though, with the exception of the 1 hour. Right? You're still working under sell signals on those longer time frames. So you have to be more than aware that price could drop again. This move could fail. You won't make it to the 200 and all that stuff, or you do, and you roll over and come back and take these levels out. And this is where a lot of you get stuck thinking, oh, it's an hourly chart. If it starts to roll over, I got lots of time for it to figure itself out and make a move higher. No, you don't. Not in a market like this. These are the type of things that could completely spit out a giant red candle and wash everybody out or stop everybody out, whatever the case is. So the 1 hour, the 4-hour will give you an idea of what might be happening on that daily chart. You got a buy signal on the 1 hour. If you get it on the 4-hour, chances are it'll show up on the daily. And it might change things, but we're still risky to the downside right now. But there shouldn't be any surprises. Like, if people are doing the work that we talk about doing, manage a handful of tickers that you like to trade and keep a macro overview on the major stuff. And the major stuff is like the indexes. I like to monitor the indexes, the 10-year, DXY. And oil. That'll give me a really good idea of what might be going on macro. But this is how you look. This is how you get those daily entries that run, or can be quite profitable. Find out what's going on these shorter time frames. And if you get the confluence that shows up on the daily, you might get the move you want. The job is to monetize the chart. I can't stress that enough. Right? We are not in the falling in love with what we trade business. That's not what we do. This is the monetize the chart game. That's all we're doing. It's as simple or as complicated as that. And our opportunities come when big moves happen. So don't necessarily be afraid of all of this volatility. As a trader, you can welcome it. Right? So CFX was down 9-10% just before we came on. There's the 1 hour. Right? So starting to recover. At least on this 1 hour time frame, you finally get a decent buy signal. Breaking the 20, breaking the 50. You look at our volume profile, where are we? Hey, we broke past the point of control and the upper value range. There's our target on this time frame. The 1 hour 200. You take out this high in order to get there, and it would be a first touch of that level since it broke it back on. Well, it broke it back on Wednesday. So how does this script make you money? By doing what you're told when you're told to do it. You could have been short here already, 2 days before the market fell. And you would have a mildly successful leveraged little short going on before you get to the big move. You had no idea that price was going to collapse. You were just in a nice little short that looked like it was having troubles with the 50 on the time frame you were trading, which is why you were there in the first place, because we like these failures of the 50 or the 200. Right? That's an ice hole failure on this time frame. How hard is it to get above the ice? I don't know. Looks pretty hard to me. So you weren't expecting a major capitulation, as all you were experiencing is price resistance at the 50 and consolidating. You had no idea it was going to be a major move like this. But that's the benefit of being at the right place at the right time, because you did what you're told. The market told you what to do. I'm sure on the 4 hour, it's probably just one big signal. Nope, a little choppy. Our job is to get you in the right place at the right time. And I think we can do that with relative precision. Monetize the chart, pick a time frame you like, and it's just trade those waves up and down. You've got ranges clearly set out for yourselves. You know how to set them. And price will move between them. Like, you guys got this. You really do. You really do. Here's Uniswap. Something that I haven't looked at in a long, long time. Does it look like every other chart that we've looked at today? Absolutely. Big impulse.
Sure does.
It sure does, right? Yeah. And all of this is consistent. Where we have, after that big impulse down, we have 2, 3, 4 green candles, but they all do the same thing. They seem to be failing up in and around the T line and creating what's looking to be like a candle that's reversing. Where did that actually find all of its resistance? Up here. Upper value range. So what I like to do is watch the 1 hour chart. I like to find tops where, like extended tops like this, where it's an impulse up. I wasn't trading this chart, by the way. I'm just kind of showing the type of setup that I like. So I'll see a chart like this with these two equal tops that's trading well above everything. So it's all of its support, it's trading all above it. The upper value range often produces the tops of a wave. You know, this one breached a little bit, but you can see even this here found resistance there. And then from that point on, it's all downhill. I love to look for the upper value range on the 1 hour chart to find these kind of candles. Big point, impulse candle up, the next candle's a equal top that eats the entire thing. And same at the bottom to go long. Right? Like here you go, here's your down here. Not as clean, but still when you're at that point of control, upper lower value range, you can usually see where'd this fail, in and around the lower value range. This is actually pretty ugly now that I see that. Yeah, it's even uglier. So here's your weekly chart. This is what we talk about. You see this candle? What you want this candle to do is you want it at the very least to make its way up to the 5 or the T line. And it's not. This is just kind of like a hanging chad, waiting for time to catch up to it, because it doesn't have what it takes to meet it anywhere, basically. And I don't like that setup at all.
I found a rhodium ticker.
Oh, did you? Okay, let's have it.
What
It's
is the top?
XRH0.
XRH0. Whoops. XRH. All right. Let's see what these look like. Okay.
Nice.
There we go.
Nice chart.
Yeah, it's not too. There's an actually perfect example, bud. There's the lower value range, right? And look at
Yeah.
all the consolidation you get along there. This is beautiful.
Yeah, that's the chop. This is that little phrase has been helping me out. When
Don't
you
trade the chop.
acknowledge that chop right there, yeah, you don't got to trade the chop, but wait for that break up or wait for the breakdown, and that's where you trade into that gap. So
Yeah.
this is a beautiful chart. I'm glad you found it, bro.
Yeah, it was worth the wait, bud. So yeah, great chart. Like you can see, its floor really did seem to be that lower value range at 358, 359, something like that. You get your buy signal price, get a nice green candle that day, but because it's been consolidating for so long, what happens is that not only your major moving averages will twist together, but also your T line and 5 EMA will also do that, because they're even shorter, and it makes it that'll be the reason why you get several signals in consolidation, right? And to your point, it's the one that looks like it wants to pop. This one does. Breaks the 20, breaks the 50. Has a little bit of a sideways pattern at the point of control and the 500 MA weekly, but it doesn't break down. You'll see the wicks that come on this from the low, from the bottom. They're being pushed up, right? That's what they are, and they're being pushed up above the T line and above the 5 EMA. So that's a bullish thing, even here still, right? This wick came down, hit the 200, and then pushed higher. So this is still bullish. Look at the divergence between the T line. This is the most simple thing, any of you guys. If you take away one thing, take away this. This is the most simple thing you can use to help guide you through a trade. This is still a bullish trade.
Yeah, and then what I like about it is because I always I get excited when I see a chart like that and I see a volume gap like that. It's like, wait a minute, it's breaking the 200 moving average after all that chop trading. It's well over the 50, and then you see that huge gap to the upper value range. It's like, yeah, that's a trade right there. There's something going on right there.
Let's just drop a level on here. Old ass eyes checked.
There's a small shelf, like there's that gap. Your mouse is almost right on there. You
So
go.
I'm just trying to pick up this really quick, and then I think the other area that you might want to look at. Let's see. Yeah, maybe somewhere in here. Not quite as clear, but look, there's your upper value range. So that's not a bad place to be. But I think you want to get, this is structural, right, on this chart. So this is weekly structural resistance through here. I think if you can break this through to the upside, I think this could run a little bit.
Look at Mikey finding the runners for us, man. That was worth the wait. You had us in suspense for a while, but it was worth it. I'll tell you that. That's a nice looking chart.
Yeah, and quite honestly, like I didn't even know this was a thing. Like I had never heard of rhodium before. I hope that doesn't make me look like an idiot, but I don't know what this is. It's not something that I'm familiar with. I love the daily. Look at this, right? You're getting all kinds of love from the 50. Here's your 1000 MA that you kind of tag on the daily and reject. Here you break through it. Second mouse gets the cheese. And, you know, other than what's happened over the last couple days, like, look, big dip, like, but big push higher. And it's the push higher up to the T line and or the 5 EMA that I want to see. That's what this is doing, which is a good thing.
And even with that dip, it didn't print a sell signal. You know, like you have, like it might be doing another bounce right off of these moving averages because that's a pretty significant pullback. And for it not to dare to put a sell signal, you got to put that somewhere on your note. Like it's still not, you know, it's somewhere, somewhere in a bullish.
To that whole point, you've got the 50 MA that you know is supportive, the 20 and 1000 MA, 1000 days of price history, all in the same neighborhood. You know, if you bounce from in here and start, you know, you got to start looking at taking out the previous wave's highs. So you're looking at 895, whatever this, I don't even know how you trade this. I guess it's a contract somewhere.
Yeah, I found this like a few years ago, right? Like, I just Googled like, hey, what's more valuable than gold, right? And that popped up.
It doesn't trade like something that's like gold. Like it trades more like a crypto in some respects, right? But I'm not
That's
saying
probably
that.
why I liked it so much. That's probably why I was like, oh my God, that was beautiful.
But I mean, again, it's just a chart, and I think that the base was clear, and for those that picked it up at these levels, good for you. And I think there's more time for it or more opportunity to run. Like to your point, there's the volume gap, right? When you break to the upside, the point of control, you know that the area to the north of that is usually somewhat gappy, right? Anything to the north and south of the POC is probably somewhat gappy. So that's what I'd be looking for. This 1090, which is kind of that structural level. You could get a rejection in there, who knows? But maybe it wants to test a little higher, 1230. But I mean, we're here to try and create some ranges and get you close. It's not pin the tail on the donkey. But that's what I'd be looking for. This is a nice chart. I think we're adding this one to our watch list because it's a nice chart. USD JPY. I don't think it was somebody in here that I was speaking to this chart about. It was somewhere else. But, what we were speaking of is, okay, let's see what happens when we break, if we can get through the 50 and start to test this level. This is just like on oil where as soon as we have an opportunity to connect, we do, and we've made this lower high,